guys. Good morning. Good morning. How y'all doing? I hope you're doing well. I have a market update. Well, babies, we got to step back and we got to give them bulls a hand. They pulled off what looked like was an improbable scenario. And that's the wonderful thing about the market. That's why we wait for verification. We have our process and techniques, and we can prognosticate, as you can say it, prognosticate about the future. But you know what? We never really know. We really never know. But look here, babies. This is a 50 here, a variable moving average. We did something pretty cool. We came up here and we tagged on this level and said, yeah, well, what we're hunting for, babies, we really need to get this 1.272 level. And that would be very logical. But right here, what I need to see is I need to see this baby pull back. Now we need a shallow pullback. Let me see what I could do here, and let's line out some parameters to let you kind of know if you're doing well. All right. So we're going to start a line. You see that angle there? Yeah, babies. Now think of this angle. This is the line in the sand. Say, if my line in the sand is over 45 degrees before I start to pull back, and I don't come below this level, you can consider that, my baby brothers, a good entry point for you at this point was technically here. But see, we know as traders, we're looking for profit and verification. We got this nice little triangle here and this little guy here. Now what we want to see here is probably something like this. Should be something like this. We should have a pullback, and if it's strong, it won't go beyond but below this 786. If this baby gets down here and closes on the hourly, an hour and 10 minutes specifically, that'll be verification. We're coming back down here, babies. And technically, if this wave is not to play out as a measured move, so we have this run down here on the bigger time frame, see what I'm saying? This pattern has to break, and this is how they break it. And they got to tell you, baby, bulls, you was awesome yesterday. Made a little short-term money, like I said I would trade, but under 45 degrees, this pullback, if we see something like boom, boom, and then down, run down around here, and then you cannot, this is like the last line of defense, 38, baby. Now, here's the thing. If you're going to see this move, the angle of this pullback is going to be under 45. If it's a mild, in other words, the angle of the dangle is the truth of the tune. So what I'm kind of looking for, now here's the beautiful thing. We're looking at this pullback possibility, and as long as this angle doesn't get under about 45 degrees down in here, it's starting to look, the force on this push would mean our baby bulls are going to go, oh, something like 1, 2, 3, 1, 2, 3. We should, I don't absolutely know, but something like we should see a 1, 2, 3, 1, 2, 3, something like that down in this area, and just for a mild pullback. So what we know about this angle, this tells us something. This says, yeah, baby, if we're up in this area, we'll measure that. We'll figure it out. But this is turning the corner. See if the bulls can hold it in. But ultimately, we need to see one or some form of try up here, then a pullback. So we pull back, come up here, get a try at it, second try at it, and finally get a third try at it. So we would see something like 1, 2, 3, baby, and this would be a significant turnaround in the market. This would be the market telling us, oh yeah, baby. Now you see how my candles went from red to green. Now, no indicator is perfect, but they can tell you where to start looking. You see what I'm saying? So these are telling us, look, all right, if we get down in this area, baby, yeah. You see this angle? Yeah, that's about the right angle. That's our turnaround play. Give us a good measured move off this and get this market rolling back into that short. And Mr. Bulls, you got to do your stuff today, baby. You got to do it. Yeah. All right. Let's see. I want to throw a little lesson in here this morning. I'll start working on your minds, baby. I put together a little presentation. Now, let me show you our style of trading, baby. Is we're like a hunter in the woods. We're hunting, baby, and we know the beast is a bear or a bull, and we get either one of them. We know we can get injured depending on our mind and perspective. All right, so options, baby, the biggest part of the market, gives us a skew, baby. This is one standard deviation. All right, look at this, baby. This is normal market trading and one deviation. When the skew is up, baby, we're going up to look at higher highs, more power in the market. When we're looking at the skew down, you can think of this kind of like a shock absorber, or where they push the deviation channel, which is normally here, down here. So people who are short are like, yeah, baby, they're pushing the skew to me to get my price on target so I collect me some money on them dang their stocks. See what I'm saying? Yeah, baby. So they buy up here, they buy up here or sell up here depending on their understanding what direction. Am I doing bull puts, or am I doing uh, uh, um, uh, let's see, what else would I be liking? If I was doing a put or a call, that naturally lends itself to buying and selling. Be, when I'm using puts, I'm thinking the market should go long. When I'm buying calls, that's when I think the market is going up. Puts means I want it to go down. Depending on your skew, you're going to get a better price if you start buying on one side or the other and you get the turnaround. Now, here's the thing with options, and you got to admire them brothers, because, I mean, not only do you have to understand trading, but you got to put an understanding on these short-term volatility, because volatility affects these. They affects the pricing. More volatility in the market, certain options are affected more. But I want you to look at this, something I track here, babies. This is called the skew. And when you see this, we had this big pullback. Oh yeah. Then I had a nice reversal here. Boom, boom, it went lower, one leg lower. This is back there a couple days. You see this is 1, 2, 3, 4. We could see them that the bulls were buying calls. The put to call ratio went up. Well, here's what we're looking at now, baby. Our market is going up, but our traders are saying we think we're going down. See, this helps us understand the main thing we're trading. We're trading against people, baby, not some kind of mechanical, the stock is magical. The Fibonacci's and the angle of the dangle to my crangle and all that. That's all that is just talk, baby. Here's what's important. We're trying to figure out how to trade against emotional human beings. So the market's going to go up and go down on my brothers and sisters. And if we understand that, we're not trading some kind of mechanical system. Got to understand it and become intimate with it. Now, babies, we are close to a break to the upside. See this line here? All right. This line here is showing us where, I'm sorry, this line is VWAP. See what I'm saying? We got people selling. That's what these red bars are, selling. And everybody that comes up to one standard deviation of selling is falling in this area. You can see there was lots of selling, 2 deviations, 1.5 deviations. That's where the normal market is. Well, this skew, this fat daddy baby, when we're turning around, it's going to neutral. Remember I was talking about that, going to neutral? Well, now it's going negatives. And you see the same pattern. 1, 2, 3, A, B, C. And I got some lessons on dancing and getting in rhythm with the market, baby. But here's the thing you got to understand. We've had push, 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 push. And if you're really, really on the SPY, you know, this is pretty amazing. I mean, we think these are giant momentum bars. This is momentum. This momentum right here. This is momentum. If we break above here, you can start. And I was telling you about this down here. I said, oh, well, we want to use our indicators at the proper time, putting them in context. And what we have, we got a dot, baby. We got pushing going on, a significant amount. Remember, that's when we start looking for something. Doesn't mean we take something, but it's looking good. Now I'm talking the longer term direction of the market, baby, and what we're trying to do to repair it. All right. It's pork chop penny, baby. Love y'all. Stay on the right side of the market. And you can see, like I said, that we are in the hunt for the long, baby. All right. We get this shallow pullback above 45 degrees, and we're golden for a pullback. We start to see this baby here come down. Now is not the time to trade. We want this minor wave and this major wave to do a 1, 2, 3. Well, right now we're looking like we're doing 1, 2. So we never take the trade on 2, babies. We want the market and synchronicity running with us. So we want to be moving on strength on the third leg, running up to key spots in the Fibonacci where we can figure out how the human being feels about what's going on. And that helps us figure out stuff. We're looking to break out here, baby. Remember I said, you got this trend channel. This tends to be impulsive, baby, when we start breaking these channels, these bigger long-term channels. The real power is understanding the bottom side